Welcome traders to our new video. Today we're going to dive into macroeconomic news and explore its impact on the markets and consequently on our trading systems. First things first, does macroeconomic news really move markets? And what are these general news items that we should keep an eye out on? One of the coaches at Unger Academy here, and in this video we're going to discuss trading systems and macroeconomic news. Releases of macroeconomic data or simple market news, like tweets, for example, can influence prices and be major drivers of financial markets. Economic indicators such as unemployment rates, inflation, GDP, and interest rates are closely monitored by traders because they offer insights into the economic health of a country or region and can affect the performance of currencies, bond yields, and other financial assets like stocks or commodities. Certainly, decisions on monetary policy by central banks are also crucial. For instance, when the chairman of the Federal Reserve, Jerome Powell, who many of you may know, when he makes statements about interest rates or future policy decision, it impacts the prices of many financial assets. As for trading systems, we can say that the data we use for our backtesting already provides us with a complete picture of how prices have historically reacted during these events. Thus, we don't necessarily need the macroeconomic data itself, but rather a statistical overview of how our trading strategy performed during the data releases occurred in the past. These events are typically recurrent and can be analyzed accordingly. For example, data on US inflation is released monthly, generally around mid-month, similar to the non-farm payrolls, which detail US unemployment claims, and are also released monthly, specifically on the first Friday of each month. So simplifying this, if we had a trading system that was developed over market data from the past 10 years, we would have numerous instances and many cases where our strategy was active in the market during the release of macroeconomic news. In this way, using a trading system, macroeconomic information might be somewhat redundant because it's already priced in, and typically less useful, which is key, because trading exclusively during news releases is quite challenging, with both discretionary and systematic trading approaches. This is due to the fact that the speed and reach the market can achieve during these intense moments are very high. Moreover, if we consider the numerous tweets from Trump a few years back when he was president, and could be soon again, who knows? He impacted the crude oil market with his tweets, making it nearly impossible to process this type of information and then execute a trade. Unless, of course, one knew beforehand that such a tweet was going to be made, but that would be insider trading and is considered illegal. In any case, adding this type of information to our systems might not yield significant benefits, nor is it advisable, in my view, to develop a trading system that systematically enters only during the release of macroeconomic news. As mentioned, the speed of the market can affect the proper execution of our trades and then, when we go live, make it very difficult to get good average trade values with our strategy. Of course, there are also market anomalies or recurring inefficiencies that might be exploitable, but are certainly out of reach for us retail traders, so it might be best to steer clear. That said, systematic traders shouldn't completely disregard all macroeconomic news, but should at least be informed about the macroeconomic events on the calendar that could disrupt the market and thus our portfolio of strategies. Now let's check on Multicharts how some of our strategies have performed during the release of non-farm payrolls, which occur every first Friday of the month and can be easily programmed. Alright, here we are on Multicharts. We've loaded two strategies, one for the S&P 500 and one for gold. Two different markets that can be influenced by the release of macroeconomic data. Then we've created two alternative versions of these strategies where entries are made only on the first Friday of each month, which is the date, as we've mentioned, when the American unemployment data, the so-called non-farm payrolls, are released. Let's go and have a look at the strategy for gold. We have an intraday breakout strategy with an average trade of about $90 roughly since 2015. An equity line that's quite impressive, absolutely very attractive. And as mentioned, the average trade reaches $92 in 800 trades. However, operating only the first Friday of each month, the average trade jumps to $356. This may suggest that this strategy, being a trend following and therefore a breakout strategy, benefits from volatility and wide ranges, actually managing to execute trades that could be considered of a higher quality than average. The strategy on the S&P 500 is also a trend following intraday strategy and has an average trade of about $35 in the last 1,433 operations. While operating only the first Friday of the month, the date of the macroeconomic employment data release, the average trade increases by over $50. Thus, in this case, the average trade has increased from $34 to $84. Certainly an increase that might be seen as less significant compared to the previous strategy, but definitely shows that for this particular strategy, and also for the previous one discussed, the volatility and the increase in range during the release of the macroeconomic data favor an increase in the average trade of the strategy. Obviously, don't take this information as absolute truth. This type of testing could be applied to many strategies, and it's not guaranteed that the outcome will always be the same across all our strategies. So, in conclusion, does macroeconomic news move markets? Well, absolutely yes. But as we know, sometimes after a piece of positive news, for instance, markets might fall or vice versa, this ultimately proves that it's the decision of the buyers and sellers that drive the market, not the news itself. However, if you're keen to learn more about systematic trading and our methods at Unger Academy, click the link in the description. There you can watch a free presentation by Unger, get a copy of his best-selling book, The Unger Method, or book a free strategic consultation with one of our tutors. If you've enjoyed the video, give us a like and hit the bell icon to subscribe to the channel so you can stay updated on all the new videos that we publish. Don't forget to leave your thoughts, questions, and more in the comments below. See you next time.